my name is Keith Gooch. I'm a small business owner and just so happen to be an accountant. And what I'm here to bring to your attention today is the fact that I see a lot of small business owners out there. They have a really good idea and they go into the business, but they don't think about the accounting aspect of their business. Let me give you a quick story. Pretend you're a fireman, and at the fire department they're going to put on your equipment, your protective suits, your helmets and everything, and they're going to give you the hose, and then you're going to be sent into the burning building. Well, what would happen if you go into the burning building and there's the flames, you see them, and then you feel the heat off of the actual fire, and you go to turn on your hose and bloop, nothing but a trickle comes out. Well, we failed to plan in this particular situation. And this is the same scenario that typically happens with a lot of small business owners. I'm going to give you three names: MC Hammer, Willie Nelson, and Wesley Snipes. Exactly. Because a lot of you were saying it, because you know where I'm going. They all have had problems with their taxes. And the reason why they had problems with their taxes is that they just put it off onto somebody else. Now, I'm not going to tell you how to prepare your taxes, but what I'm going to do is give you some simple accounting principles so that way you will be able to keep track of what you have to do in order to turn it over to your accountant. Because you'll either A, be able to deduct additional amounts off of your income tax, or B, you're going to have to pay a little bit more in taxes. Hopefully, you'll be able to be profitable in your business, and based on some simple accounting principles that I'm going to teach you just on basic record keeping, you will be able to reduce the amount that you have to pay in taxes, because what you don't want to do is overstate your income. Okay, now what we have up here now, this is called the profit and loss statement. Okay, now what the profit and loss statement basically shows your sales, expenses that must be incurred in order to get these sales, and then what's left over after these expenses that must be incurred are deducted from your total sales. Okay? Whoa! I tell you what. Okay. Let's get back to it. Hey, I may not be too graceful with this, but I'll tell you what, so long as I can count, that's what matters, okay? Now, barring that little snafu, let's go back. Your profit and loss statement shows your sales less cost of goods sold. That means expenses that must be incurred in order to get the sales, and what's left over after those particular expenses that were incurred are deducted from your sales. Okay. Now, I'm going to use a simple example here. Let's say, for instance, you sell T-shirts. Okay. If you have a home-based business where you're selling T-shirts, and let's say, for instance, you get in an order, and they want to buy the T-shirts. Well, you got to get the shirts, you got to get the ink, you got to put the individual logos on it. Let's say even if it's a plain T-shirt, it's just a plain T-shirt, and you're selling the T-shirts. Even if you're the manufacturer, you still have to buy the T-shirt. Okay, and let's say, for instance, the total cost of the T-shirts was $9,000. Okay. Let's say you sold, after your markup, $10,000 worth of T-shirts. You may have sold $10,000, but you incurred $9,000 worth of expenses, meaning that you only made $1,000. Now, hopefully you would make more than that, but what the whole point of this is to show you that just because, this is why it's important to keep track of what your expenses are, because you may have a high volume of sales, But you got to take into account what it took to get those sales. And if you're a business, you're always going to incur an expense in order to get this sales, okay? Now, one quick note. When you see these brackets, this in accounting terms means a negative or subtraction. So you had $10,000 worth of t-shirt sales, but your cost of goods sold was $9,000. So $10,000 less than $9,000, your gross profit is $1,000, okay? Now, I hope that you all can see this. But now I've added another section to your profit and loss statement. The next section will be marketing and sales, okay? This is how you know that no business will stay in business unless they market or advertise, because nobody knows that your business exists if you don't put it out there that you do exist, okay? Now, we have to account for that. If you have somebody out there that's promoting your product and you have to pay them a commission and it's coming out of your operating expenses for your business, then you have to account for that, of what your gross sales are. Well, that's $100. Then, for you multi-level marketers, what I'm going to do that advertise on the internet, let's say, I'm going to show you that if you are doing the pay-per-clicks, let me go back. Not necessarily multi-level marketers, but anybody who's marketing on the internet that is paying pay-per-clicks. Now, if you look on Google, just for example, when you bring up something,